What a week it has been, filled with volatility but very range bound, and a very narrow band is what the market has flickered in. On closing basis on Friday, we've seen a level of 51.45. The two parameters that really dictated the market mood, of course, was the CCI report on cement that we'll discuss in greater detail in just minutes from now. And of course, the rupee weakness as well as the crude weakness. One in favor of the markets and the other not quite so. So quickly want to walk you through how the week went by. On a net basis, we've closed in just about marginally soft for the Nifty as well as the Sensex, down about 0.2%, or actually gained on a closing adjustment basis. Absolutely flattish for the Sensex, ditto for the Nifty as well. The bigger traction this week and the action really was in the broader markets. So 1.5% in the green for the mid-cap index, and the small caps as well gained nearly 1% over this week. The Bank Nifty again just marginally soft and flattish close over the week, down about 0.2% or so. You had traction coming in for the healthcare index, up almost 2%. Oil and gas held out very well thanks to the entire OMC basket on account of crude weakness, was a gainer to the tune of about 1%. Power held out very well as well, so 1.7% gain coming in. Consumer durables looked good, and so did autos. Individual movers, first the gainers. ONGC looked good, Hero MotoCorp did very well. You had Reliance Infrastructure, Tata Motors, L&T, BPCL, Siemens and Sun Pharma were your key gainers in trade. On the flip side, there was weakness coming in for TCS, SAIL, Reliance Industries, of course, was a big drag on the markets. Ditto was the case with an Infosys, Ambuja Cement, news-based moves coming in there, and Axis Bank as well as SBI were net losers over the week. Lots to chat about then. Let's welcome in our experts, Mitesh Thakkar as well as Hemen Kaparia. Mitesh, pretty directionless moves coming in, range-bound and a very narrow band for the Nifty for almost all trading sessions this week. What's the week ahead looking like?
Well, Aisha, I think, you picked up the nerve very well. It's been a range-bound week for the markets, and you did mention that the mid-cap index was where the action was. I think that's what is happening. For the week ahead, I think, the way to trade large-cap stocks or the index would be to identify, where the breakout of this range-bound movement can happen. So I think 51.80 on a closing basis on the upside is the trigger, 50, 50, 50, 40 broadly on the downside is the trigger. My sense is that we might consolidate for the next few days and then eventually break on the upside. Now the reason for this positive bias is, as you mentioned, the participation of mid-cap index. The breadth of the market has gone up very nicely. We have seen a lot of stocks which were kind of laggards or lagging behind in catching up with the index have started to perform, and I think broadly this gives me the confidence that there's a good chance or a positive bias of a breakout happening. But I think on the index one should wait for a trigger above 5180, and I think once that happens, in the next few days, we might see levels beyond 5,300 as well.
Hemen, what are you picking up after a close at 51.45? What does it indicate in terms of what direction the Nifty may take next week?
Aisha, I would agree with what Mitesh has been saying. We've been moving sideways for 10 trading sessions, Aisha. If you look at the range, it's roughly between 5020 on the downside and 5180, 5190 on the upside. So 11 trading sessions, I think, and now we seem to be looking set for an upside breakout, which hasn't yet happened. So if we take out 5190 in terms of a closing, I think we could be moving roughly towards 5380, 5400. So as of now, despite, the big concern is the rupee depreciation, but despite that, as of now, the markets look poised for a breakout, and I think the Bank Nifty will lead the markets if they do actually go up.
Mitesh, let's pick up the two most liquid ones, Ambuja as well as India Cements, and what would you do with these names now?
See, I think Ambuja, if you recall the earlier price movement, the stock kind of peaked out in February around the levels of 175, 180. This week the intra-week high was around 180. So it's anyways close to the supply point. I would not really look at Ambuja for the time being. One is that the stock has rallied from levels of 135, 136 to about 180, and we've had some kind of bad news. So that is slightly on the avoid side. But I think the interesting ones are ACC and India Cement. And I think, that's where some kind of action might happen. India Cement went up very nicely on Wednesday, and then Thursday, Friday were corrective. But I think once it stabilizes above 83, 84, which is also the 200-day average, I think there's a case for the stock moving up to as high as 92. And as long as the stock remains above 80 on a closing basis, I think I would be comfortable, looking for a long trigger over here. Similarly, ACC, we have seen that despite 2 days of bad news, I think 1190, 1195 have been critical support levels. The stock bounces back even if it opens gap down around those levels. So I think as long as it's above 1195, I think maintain a positive bias. But for trading long further, I think the stock should now start closing about 1240. If that happens, I think 1300 plus levels could be tested here.
Hemant, how long can we see this underperformance actually be a drag on Reliance?
Well, it's been around 36, 37 months and counting, Aisha. So not very surprising. But having said that, if you take a very near-term view of Reliance, we've been down badly. But some sparks of life seen on the hourly charts towards the close today, Aisha. So some sort of recovery seems to be underway. We've almost come back and close above 711, which is technically slightly important. So if you take a very near-term view for a day or two, I think and deep reversal situation on the day, intraday charts would seem to suggest, Aisha, that Reliance is set for a bounce back, and that bounce, there's some positive divergence also. So bounce back could take it to maybe 723 or 725. But you're right, if you look at the big picture, it's been underperforming. I don't know how long it's going to take more to underperform.
Mitesh, want to get you in on Educomp as well as Manappuram, Indian Hotels and Jubilant Foodworks, and if you would have any trading strategy on these four names.
See, Jubilant was a sell call on Thursday as well as on Friday. I think it's met the first target of 1125, 1120. That's some kind of a support area, but my sense is that once it starts trading below 1120, I think you would see the declining force gain momentum, and I would not be surprised if the stock actually corrects to levels of about 1070 to about 1050 on the downside. So if somebody wants to enter fresh, I think sell below 1120, keep a stop loss just above 1142, 43, around a 2% kind of stop loss, and I think 1070 to about 1050 would be a good target on the downside. Educomp also was a very strong move during the week. It's triggered a short-term up move. I think the stock has the potential to test levels of about 165, possibly even 174 on the upside. And somebody now looking to get into the stock should wait for a minor dip. I think 153 to about 152 could be a good buying range. Keep a stop below 145 and look for first price target of 165 and then 174. The other one which I have picked up is Indian Hotel. I have not tracking Manappuram really. So Indian Hotel also, I think in the late Friday, I think there was some kind of strong breakout happening over here. I think the stock can test possibly levels of 65 to about 66 on the upside. And I think, this one can be bought with a stop just below about 57.5.
MCX as well as Financial Technologies were the two newsmakers from the mid-cap universe. MCX gained a good 3%, 1046 is how it shut shop. Let's bring up Financial Technologies as well and show you how it performed this week. That stock too will just come up for you on your screens. Hemant, have you taken a look at Financial Technologies?
Yes, Aisha, while you were speaking, I was just looking at that. Financial Technologies is not a big surprise. We had formed a small rounding bottom. There was a significant amount of positive divergence. There was strong support. So it had gradually entered a short-term uptrend, which was on the cusp of entering an intermediate uptrend. So not very surprising. It was anyway doing some work before that. MCX is interesting. I said it was moving sideways between 1000 and 1050. And now, we're on the verge of, and this was around 8 trading sessions. So once we take out 1050, I think MCX seems like a distinct possibility of appreciating further.
Mitesh, what is looking like the strongest mid-cap pocket currently, which you think is going to have significant headroom come Monday morning as well?
I can't distinguish purely because of the fact that the Nifty mid-cap index has just given a breakout. So while we have seen reality, already do its bit in the sense that we have seen HDI lead the way. Similarly, I think in the infra pack, we have seen Lanco, IVRCL or JPSOs, it also move up further. All these stocks are going through a short-term up move. Now, I'm not very clear as to which will perform the most strongest from current levels. I think, banks to a certain extent, the smaller PSU banks are a late entry after the kind of disruption which happened due to the, RBI stance on the credit side. I think banks are now just giving breakouts. So maybe, banks would play a catch-up and could be slightly more percentage gainers. But I think the entire mid-cap space looks very, very exciting for the time being.
You mean any infra or realty stock that's looking strong to you?
I think India Bulls real estate should be an interesting stock to look at, Aisha, because the stock DLF is the one which is looking more interesting, frankly speaking. But yes, I think India Bulls looks looks also interesting. A sideways movement, once again a deep oversold situation. Now we are seeing some strength coming in terms of India Bulls. So that would be one stock I would tend to look at. We take out 60 in terms of, and okay, anyway, we are on the last trading session of the week today, Aisha. So once we take out 60, I think we are setting the stage for a 8 to 10% upside from here.
Mitesh, just want to get you in on the entire OMC basket. Crude cooling off augurs well for these names, but with the run-up that we've already seen in names like an HPCL, IOC as well as BPCL, what would you do with these counters?
See, I think that's the question, which has been worrying me. We were very positive on HPCL, and I think it's met the upside targets of about 340, 345. And I'm not sure as to how long, we should look for an up move. I think maybe once the stock gives kind of a pullback, because the stock has gone up by about 11% in this week, and we typically don't see OMCs, enjoy this kind of high beta movement. So while I'm still would look to buy over here, I think a good level to enter HPCL fresh would be around the 318 to about 322 on the downside, and I'm not sure whether we'll get that first or we'll see the up move extend to levels of 355, 360. Coming to BPCL, I think it's met the upside targets of 765 to about 780 on the upside, and I'm not sure whether we are getting immediate upsides, because that's also the all-time highest closing the stock has ever recorded, and that's an important supply point. So BPCL is an avoid. I think HPCL is one. If it comes, if it's if there's some kind of declines available, I think that's the stock I would look at.